Welcome to the Snowbirds Expat Radio Podcast, powered by the Snowbird US Day Tracker app. I'm your host, Gerry Scott, and my goal is to give you answers to your cross-border questions, to ease the stress of a cross-border move or extended trip, and to keep you up to date on all you need to know with cross-border rules and regulations. Now let's get on with the show. Well, hello everybody. It's Gerry Scott here from the Snowbird US Day Tracker app, which is powered the Snowbird US Day Tracker Expat Radio Podcast. Probably haven't got that right, Steve, but it's a new gig. We've only had, I think this is number 30 or 40 episode, and Steve's been on most of them. So, Steve, welcome back. Welcome back.
Gerry, I'm always happy to be here. I think it's my fourth appearance on the podcast, and I always look forward to having these conversations. Certainly about U.S. Canadian cross-border taxation. And, I think we've got a really exciting topic today.
Well, I got to tell you, anytime I get a chance to spend 35, 40 minutes with yourself and going over U.S. tax issues, these are Canadians that are Americans living in Canada or Canadians coming home that have U.S. exposure to filing taxes. I always enjoy my time. I'm a real sponge. So like you say, today is going to be very interesting because with the election coming up, Trump and Steve, I reached out to Steve right away because Trump came out and said he's going to eliminate double taxation. And the first person I thought of was, I got to get Steve on here just to give people some understanding of some of these impacts and some of these decisions that if Trump does get back in, how does that impact not Anderson as a firm, but the clients that are out there that are wondering what's going to go on here. So, Steve, are you ready? Are you ready to jump right into it?
Yeah, well, I would. And like a lot of campaign promises from candidates, whether they're Canadian or U.S., there's a lot of, talk about them, but there's no substance and no legislation and no detailed proposals. So, Donald Trump's proposal here was something that his administration and some of his advisors have talked before about, and he's had an opportunity in the past to address this. But it is that U.S. citizens, regardless of where they live around the world, are subject to worldwide taxation on their income and assets, not only in the country they live in, but in the United States as well. And it's a unique situation, and it in certain circumstances can cause an individual to pay tax twice on the same income, which is kind of how I would define double taxation. And he's referring to anything from paying twice tax on the same income to the complexity of being a U.S. citizen abroad. So we're not sure what he's talking about, but I can speculate a little bit what he might be referring to.
Well, we're going to go. We were just talking before we came on air. There's a event going on. I believe it's 4:30 down in Vancouver, 1055 West Broadway, the Can-Am Chamber of Commerce, and I believe there's going to be a person from Anderson Tax there on the panel. My Carson with Snowbird Wealth Management was supposed to be there, and he's having their third child. Not he's having it, but our daughter's having the third child. So I guess I get to sit in. So I did prepare for it. We're not going to bore people with a Democratic view or a Republican view, depending on who gets in. So we'll have lots to talk about on October the 29th. And
it's my partner, Namir Halleck, that's going to be joining you on that. And he and I have been speaking. He's looking forward to that as well.
Well, not as though I'm trying to sell any tickets, because I believe this event's sold out, but there will be scalpers there. So just kidding.
Perfect.
So anyhow, let's jump into because this is very interesting. Before I jump into these questions, a couple weeks before, Trump was mentioning a flat tax, and boy, I bet that got a lot of people excited about, elect me as president, and I will provide a flat tax in the United States. And I'm going to kind of jump into that. Is that possible?
Well, in one respect, anything's possible. But I think, one of the things that we have to understand as Canadians is that the U.S. political system and the way laws are drafted, debated, and passed is different than our system. The U.S. system has a number of checks and balances in it, and it isn't just the president saying do this and it gets done. Legislation has to pass through both the House of Representatives. It has to pass through the U.S. Senate. Depending on which of the two parties controls those two chambers, has a big impact on whether legislation get it passed. The radical idea of a flat tax, given the past history of the United States of significant tax reform, and it's infrequent at best, I think is a very low probability. And I think, it's one thing to kind of go on a campaign trail and say these things, but it's a whole different one to look at the economics of what a flat tax means, to try and cost it out over a budget cycle, to, have the representatives in government pass it. It's probably beyond a long shot that something like that would get enacted.
Now, we talk about the American system and how they pass laws and changes. What about the Canadian system? I mean, they announced that capital gains was going to be $250,000 personal exemption, and then after that, it's going to be 2/3 is going to be taxed as a capital gains. What's the difference between the two systems?
Well, I think the biggest difference here is that is a parliamentary system, if you will. Bills are introduced into Parliament. They're through a debate, and a majority of Parliament, if they recommend and pass that legislation, once it kind of goes there and gets to the Senate and comes back, it can be passed into law. And so in general terms, as long as a party has control, it can pass that legislation. And, the Liberals have had a minority government for some time. And so they on their own can't pass this legislation. But, for a number of years until recently, the Liberals had a coalition with the NDP, and that gave them enough votes to get legislation passed. And so, from that, it doesn't require the different sets, the different, go through kind of what the U.S. budget reconciliation process is a little bit later. But it can be, certainly much more straightforward in a parliamentary system when you've got a majority government. But even with a minority government where you got cooperation with a couple of parties, this can get passed. When you look at the United States over decades, you really haven't seen cooperation or bipartisan type help between the two parties. They just seem to have been at war with each other for everything. And hence the difficulty to get legislation passed in the United States on anything, let alone tax reform.
Okay, so we'll go back to the, one of the questions that was on top of the list here is that the double taxation. Now, we know that there's a treaty there. In most cases, there's a treaty between the countries. So double taxation doesn't really exist on the individual basis right now, does it?
I think in general terms, you're right, because there's a system of both an income tax treaty with not every country that the U.S. trades with, but certainly most developed countries in the world, Canada being including one of them, have an income tax convention that puts rules and puts procedures in place to basically prevent an item of income or an item of gain of being taxed twice, once in the United States and once in, let's say, Canada. In addition to income tax treaties, the United States also has its own system of foreign income deductions and foreign tax credits that recognize that another country might have first rights to tax that income, and therefore the United States will provide a credit so that that income isn't subject to double taxation. So in general terms, most U.S. citizens who live outside the United States aren't subject to double taxation. However, like everything in tax law, there's exceptions. And I think the exceptions is potentially what Donald Trump is referring to. And these exceptions, I'll give you one example. I want to say within the last 15 years, under President Obama's term, there was legislation passed called Obamacare. And part of the funding for Obamacare was something called the net investment income tax. And this is a tax on U.S. citizens, regardless of where they live in the world, of 3.8% based on their passive income. So it's interest, it's dividends, capital gains, certain other types of passive income is subject to this 3.8% tax. Now you might say, well, what form of that is a double taxation? Well, when Congress passed this legislation, they didn't allow foreign tax credits. And so you often get into situations where, take a U.S. citizen resident in Canada, for example, they're already subject to Canadian tax on interest and dividends and certain capital gains. because they're a U.S. citizen, they're also subject to U.S. tax. In general terms, under their regular income tax, they'll get foreign tax credits that'll relieve the double taxation. However, since that net investment income tax in general doesn't allow foreign tax credits, it's also subject to the 3.8% tax. So that's an element of double taxation because you're already paying Canadian tax on certain passive income. Now you got to add to that the 3.8% Obamacare levy or the net investment income tax.
You know, it's interesting because as soon as you hear Trump's going to eliminate the double taxation, we have people calling us up and saying, does this mean that as a professional, I can incorporate in Canada and not have to worry about double taxation? And I said, well, let me give Steve a call.
Sure.
How do you answer that? Oh, we know what the answer is.
Well, I'd say that's another form of double taxation. And so, to back up a little bit, a very common way for Canadian professionals or Canadian business owners to plan their Canadian tax affairs is to either incorporate their business, incorporate their practice, or have a holding corporation to earn income. Very common Canadian planning technique. But when it's a corporation, under U.S. tax law, if that individual was also a U.S. citizen, now they're subject to some anti-deferral regimes under U.S. tax law. And it's anything from what's called the subpart F income rules, or the idea that if you've got passive income that's earned in the corporation, the individual pays tax on that, even though they might leave the money in the corporation. So now you've got a situation where Canada's taxing the corporation on the income, but at the same time, the U.S. is taxing the individual on the income. And now that's a form of double taxation because you can't use, very difficult to use the Canadian corporate tax liability as a forward tax credit on your personal U.S. income tax return. So that can be a form of double taxation. The other one that happens with U.S. citizens that have Canadian corporations that control them, that have more than 50% of the votes or value of the shares, is what's called the global intangible low taxed income. And I can understand if people haven't heard of that long phrase, but you may have heard the word GILTI, and that's what those 5 words stand for. This is the GILTI tax regime that basically says if you've got active income in a corporation, we're going to tax that now, even though you might leave that income in the corporation. So it's another form of potential double taxation on U.S. citizens resident, around the world that have corporations in that jurisdiction. The irony of all this is that latter regime I just described to you, this GILTI tax regime, these anti-deferral rules, these were enacted in 2017 in Donald Trump's first year as president as part of his big tax reform package. And so while he promises now to try and eliminate double taxation for U.S. citizens in Canada, in fact, in his first term, he added to the problem, or he and the Republicans added to the problem.
The last time that you and I had a chance to spend some time together, you were getting birdies, I was getting bogeys.
It was a great afternoon at Vancouver Golf Club. I do thank you for that. That was fun.
It was great for you when you were getting birdies, and you were a very happy person. But the bogeys is we talked about, is it called a unlimited liability corporation was something that came up. And I'm going to give you a chance to kind of talk about that. And is that still a planning strategy for Americans living in Canada?
Well, it is. I mean, the idea here is you've got all these anti-deferral regimes when you use corporations as a U.S. citizen, and if these corporations are formed outside the United States. So, for example, a U.S. citizen living in Canada, a Canadian corporation would be caught by these anti-deferral rules. On the other hand, if that individual forms something called a Canadian Unlimited Liability Company, I'll refer to as a ULC, from a Canadian perspective, it's taxed the same way. All the same tax rates, the tax benefits of you in a corporation in a ULC are the same thing in Canada as a regular Canadian corporation. The biggest difference from a U.S. perspective is that it's a flow through, it's a pass through. If you own all the shares as U.S. citizen, it's actually a nothing. It's like a branch. So all of the income, all the expenses, and most importantly, any Canadian corporate tax you pay is claimed as a foreign tax credit on your U.S. personal tax return. And so you can eliminate all of these anti-deferral rules, these subpart F rules on passive income, these GILTI tax rules on active business income. You can eliminate them by using an unlimited liability company. So in the right set of circumstances, it can make a lot of sense for a U.S. citizen to use a ULC instead of a regular Canadian corporation.
Okay, we're going to call that a little tidbit for our next podcast when we're going to go into this in greater detail.
Sure.
Now, we know that when Trump says, I'm going to fix this double taxation, you mentioned it's been tried many times. Or when was the last time there was a real push to eliminate this double taxation?
Sure. I was looking this up as we were talking a bit about it. There was a congressman in North Carolina. He was a Republican congressman named George Holding. And George Holding, shortly after the big tax reform in 2017, proposed something called the Tax Fairness for Americans Abroad Act. I don't know what the abbreviation would be for that. But the idea behind this legislation, this proposed legislation, was to change the taxation of U.S. citizens outside the U.S. from citizenship-based taxation to what's called residence-based taxation. Now, the latter, residence-based taxation, is what you commonly see for pretty much every other country in the world, that you're really only subject to income tax in the place where you live, and you're not tied to the country where you might have been born or the country where you've got citizenship. That's how most countries work. You know, the United States is quite different in that it taxes citizenship as well as domiciles or people who are residents of the United States. And, you know, that citizenship taxation, it probably goes back 100, 200 years, and it kind of predates the Civil War. It goes all the way back to a time when, you know, a lot of Europeans who had come to the U.S., who got U.S. citizenship, would leave the United States and not pay tax because they didn't live there anymore, but also still have the rights of U.S. citizenship and all the benefits it creates. The United States, you know, didn't like that and was concerned that people were getting the benefit of citizenship but not paying the tax that was needed to build, you know, an infant country that was growing. And so the United States, you know, hundreds of years ago, implemented citizenship taxation as you know, has kept it ever since. Congressman Holding's proposal under this act was to modify more to a residence-based taxation, so that if someone was a resident outside the United States, they could elect or choose to be treated for that for U.S. tax purposes, and they're, you know, wouldn't pay U.S. income tax on their income in that country. They'd only pay U.S. income tax on any U.S. source income. And so, you know, that was a proposal. There's been others like that over the decades. You know, the problem you always have with these is that they're proposed, they're lower level. They can get debated, they can get, you know, kind of left in the House of Representatives. They never go anywhere. And, you know, in Congressman Holding's case, I want to say, I think he retired. I don't think he ran for re-election in 2020 or 2022, whichever the year was, and he retired. And so that act or that proposal died. And so maybe that gets restarted with Trump's proposal. Maybe some other form gets started, but, you know, there have been these things in the past, and the problem I think you always have is who's going to champion this thing to get it through the House, the Senate, and on the president's desk to be signed.
You know, it's very interesting because when I talk to my friends in Maui, and Maui is a Democratic state, but if you give them a chance to vote between Democrats or Republicans, it comes down to the love of the wallet. And they really believe that Trump is going to be, and I guess that's my next question, is that how does such a proposal really impact a voter?
Well, you know, that's a really good question, because when you think of whatever that estimate is, the 5 to 8 million Americans that live abroad, the U.S. citizens that aren't living in the United States, they're not one group. That's not an electoral district. That's not an electoral college vote, if you will. They're fractured, and they're fractured, I think, in general, based on where they last lived in the United States. And so those, you know, 5 to 8 million votes get spread over 50 states and however many, you know, districts and colleges and wherever else it is. And so it's a scattered population of voters that, you know, has never really had that champion to kind of try and get something dramatically changed for them. I mean, I think when you have such a close election like it is, you know, Donald Trump is reaching out to voters to say, hey, you know, vote for me, I'll help you. You know, I think that challenge is that, you know, because it was only announced, say, 1 or 2 weeks ago, a lot of those people abroad have already voted. you typically have to vote, mail your ballot in, and those may have been already voted in. So I don't know what impact he's having on this. I can understand the political aspect of saying, well, if every vote counts, and it does in a close election, it could make a difference. From a policy perspective, I can understand the impact too that says, why is it so complicated for a U.S. citizen abroad to have all these rules and procedures and reporting requirements and this significant expense to prepare a tax return and deal with the adverse tax consequences I dealt with and the guilty and all these other abbreviations? Why can't it be more straightforward like every other country in the world? And so, I can definitely understand that.
Before I ask this next question, I'm going to quickly go on to my GPT chat GPT, and I'm going to say, what election promises?
I'll be fascinated to see what GPT delivers on something like that, because
well, it's going to be a lot quicker than me typing it in.
One of the things, Gerry, that if you go back in time to 2016, in some of the election runout, some of the tax promises, there were members of Trump's cabinet and Trump's administration, his team, that would have suggested this was something they wanted to pursue. And it's a difficult one to get through to law, because of the process and because of the way tax law, or at least laws are kind of drafted and debated and then executed in particular. So this will have some challenges.
Okay, here we are. Here's the election promises. Build a wall, tighten immigration policies. Okay. Repeal and replace Obamacare. Bring back jobs to America. American first foreign policy. Tax reform. Draining the swamp. Geez, if you drain the swamp, anyhow, I won't share any political views. Law and order, rebuilding the military, cutting regulation, Supreme Court appointments. That was pretty well it. Now, I would say that he probably he probably did okay. And I'm not saying I'm a Republican or a Democrat, but I'm pretty sure that we're seeing the same theme on this promise as well too, on these election promises. But tax reform.
Well, and tax reform is always a bit of a challenge. To get into the details of how laws get passed into tax laws get passed into effect. One of the challenges is control of the House and control of the Senate. And if you go back to 2016, you had a kind of a perfect line of events for the Republicans. They got control of the House, they got a slim majority in the Senate, and they had the presidency. So when you line those things up, it becomes a little bit easier to pass, some kind of tax reform. In the Senate, there is a rule called the budget reconciliation process that basically says, unless you have 60 seats or more in the Senate, so unless you have 60% control, you've got to go through, when you pass tax law, a budget reconciliation process. And that basically says, if you're going to make changes, they've got to be revenue neutral over a 2-cycle period or over an 8-year budget cycle. And so anytime you see, tax law get changed, and certainly in the last 20, 30 years, where neither party has had that super majority in the Senate, you go through this budget reconciliation process. And so now if you're going to make a tax change, if you're going to make a cut, you've got to find something else to raise the revenue. And so, this happened in 2017 when the Republicans started to try and make all these changes. And one of their big deliverables was to eliminate double taxation on corporations. And through, that process in 2016, we got the Tax Cuts and Jobs Act, which, went through a major renovation, a major rewrite of tax law when it came to corporation and profits abroad, and effectively, eliminated double taxation of profits abroad for corporations. And that had a cost to it. That had a cost, to the budget. And that had to be offset by increases in other places to make sure you have a revenue neutral, group of changes. And so that's why when you go through this tax change process, unless you have that super majority, that 60 seats that are in your party in the Senate, it's going to be a challenge to get massive tax reform without, raising revenue in other ways. And what happened in 2017 was, the Republicans did a good job of getting the corporate changes done, but any of these personal overseas changes had to get left by the wayside.
We have Raymond James has a full-time Washington correspondent named Ed Mills out of St. Petersburg, and I guess he hangs around. You'd have to kind of hang around Washington to be that correspondent. But before Biden did step aside, they were saying that they really believed it could be, and this is a non-political view. They believed that the Republicans were going to get the House, the Senate, and the presidency. So it's interesting to see how this has become more of a race with Harris and Trump. So it's interesting. But the biggest thing, the biggest purpose of today's podcast was really trying to shine some light, because it sure seems like right now it's a pick'em. I was explained in politics in the United States, 48% of the people are Republican, 48% are Democrats, and then there's the other 4 basically are swingers. And that's where everybody's kind of focusing on those swing states and where they can pick up those votes. And I believe Ed Mills also said that the last election came down to 38,000 votes.
Yeah.
Really determined who was going to be the president of the United States. So, Steve, before we let you get back to serving all your clients on U.S. tax cross-border matters, anything else you'd like to add?
Well, it is an interesting debate as to what might happen down the road, and whether it's a Republican promise, which we heard from Donald Trump last week, or whether it comes from the Democrats. I could definitely see where, this kind of proposal to alleviate some of the problems that U.S. citizens abroad have, has merit and probably is overdue. The caution I think here is probably twofold. One is the likelihood of it getting passed into law, which, we've seen for decades. There's been proposals and they just haven't moved very far. I mean, this will have a cost to the Treasury by doing this. And so it's got to be offset by, revenue raises or tax increases or something else, in other places. And so that's a starting point. The other one is what is in the details. And that's the success of the devil, or whatever you call it, is always in the details. And if you look back to 2016, 2017, when the Tax Cuts and Jobs Act was passed, there was a great relief for corporations that had profits that were overseas in subsidiaries, that it was a much fairer taxation, but there was a reconciliation. There was a judgment day, if you will, that for the last 31 years, they had another regime. And so, those corporations were subject to tax on the profits they earned from 1986 to 2016 or 2017. So it was the 31 years worth of tax that came due, and there was, benefits and credits and everything else. But there was kind of I'm going to call it an exit or an entry tax to get to this new regime. I open the question, would U.S. citizens abroad have that choice, and would the same thing happen to them, that if they want to move to residency taxation? I question whether it'd be as simple as checking a box and moving forward. I suspect there may be some sort of exit or entry or some sort of other regime that could tax, unrealized gains or some sort of other asset tax. And so there may be some choices that U.S. citizens abroad have to make. We don't know what this is going to look like. It will all depend on, as you said, who wins the presidency, who gets control of the House, who gets control of the Senate, and all the other tax changes they want to try and bring in, and how these things all balance. It'll be fascinating to see what happens early November. It'll be fascinating to see what happens over the next couple of years, to see what the U.S. does here, if anything.
Well, I have so many great friends in the United States, and I'm very careful when I try and take a nonpartisan view. If I'm going to give a 3-foot putt to a Democrat, I'm going to give a 3-foot putt to a Democrat. So trying to keep things fair here. But Steve, as always, I enjoy your wisdom, your intelligence, and thank you very much. And we will spend more time on this unlimited liability corporation.
Absolutely. Gerry, I look forward to it. I always enjoy these podcasts, and thank you for having me.
Take care. Thank you again for listening to the Snowbird Expat Radio Podcast. The best way you can support the podcast is to forward the episode to a friend, and please don't hesitate to like, subscribe, or leave a comment. Now, before you go, let me leave you with one of my favorite quotes. Be kind to all, the world is small.